While parts of the economy gorge on the mining boom, the biggest and most important sector, retail, is under serious and sustained pressure. Analysts say the last of the Reserve Bank's interest rate hikes in November put a major dent in consumer confidence. That and the growing popularity of online shopping have led to the collapse of some of the country's leading retailers. Others are watching nervously, as Connor Duffy reports.
The collapse of the Colorado Clothing and Footwear Group is the latest sign that the dominance of the shopping centres dotting Australia's urban and suburban landscapes is under threat. In the short term at least, that's bad news for everyone.
Essentially, retailers take about 40% of our spending, and so our whole economy, which is worth about $1.2 trillion a year, about 40% of that goes through the till. So it's incredibly important to our economy, and as that slows, the whole economy slows.
We've got consumers in this country at a historical level of caution.
The Colorado Group has about 450 stores across the country, some of which are expected to close. As well as Colorado, the group includes a number of other well-known brands.
Colorado is certainly the biggest group in that. Colorado, there's Mathers, the shoes. Jag, we know that clothing line. That's another big one. Now, Jag's an interesting one because that's a little bit higher level than Colorado and Mathers, and as a result, there's a lot of speculation that someone will actually come and buy Jag.
Just 4 years ago, the private equity firm Affinity paid more than $400 million for these businesses. But analysts say a combination of high debt, poor brand recognition and generally weak consumer sentiment caused the collapse.
People are very feeling underconfident at the moment. There's a lot of uncertainty out there. There are pressures externally and internally in terms of weather, floods affecting confidence, but also interest rate rises potentially.
Just last month, Red Group, the owners of Borders and Angus and Robertson bookstores, also went into administration. The Australian Bureau of Statistics released figures today that show retail sales increased by 0.5% in February, but no one is celebrating.
I think we're a long way from being out of the woods and into a retail recovery. These figures probably mean quiet caution, but we're still walking on eggshells.
It is very competitive. Consumers are very fickle at the moment. Some of them are saying that it's actually even tougher than the global financial crisis.
The market is so unpredictable, no one knows when shoppers will start filling their trolleys again. Analysts believe some of the Colorado businesses will be back under new ownership, and retail king Solomon Lew has expressed an interest.
Retail is a very cyclical business, and at some point over the next 5 years or so, when interest rates start to fall again, and when maybe electricity prices have stabilised, and when maybe people aren't saving 10% of their pay, that's what they're doing at the moment, and that comes back to 5%, they will actually start spending again.
The problem for retailers is that while they wait for the upturn, new competitors will continue to emerge, all of them hungry for their own slice of market share. Online sales are booming, and businesses from all around the world are targeting Australian customers. At the moment, online sales only account for about 4% of the retail market, but it's growing quickly.
eBay's grown massively over the last 12 years, but actually we've seen particularly large growth over the last year. So, for example, our Australian-based sellers selling on eBay grew 10 times that of retail in 2010, and actually our top 2,000 businesses grew about 38%. So really big growth compared to traditional retail, which remained relatively flat last year.
And it's not just Generation Y that is moving online. Prices as much as 50% lower are attracting shoppers of all ages.
In fact, in the last 3 years, over 50% increase in the internet usage has been actually the baby boomers, or the people above 55.
Online's still a relatively small part of the retail spend. People still prefer to go to the shop, to touch it, to feel it, to try it on if you like. But it is going to be a growing issue for all retailers.
The battle for the retail dollar heated up earlier this year when Gerry Harvey, owner of Harvey Norman, hit out at online retailers because they don't pay GST on transactions under $1,000.
We have overseas retailers that do not pay duty, that do not pay GST, and we have to compete with them. All we're saying is we just want a level playing field.
The issue is not so much about GST, but about retailers and businesses making sure that they're where the consumers are, and increasingly that's online.
Is it harder to get sales now than it was yesterday?
Gerry Harvey has now announced plans to set up an online store himself, and it's clear others will have to follow suit.
Smart retailers will be multi-channel retailers, and Harvey Norman are very smart retailers. So I think you'll see more and more options for consumers going forward.
Connor Duffy with that report.